So is there any relief in sight? Well, we're joined by a fantastic panel. Peter Schiff, the president of Euro-Pacific Capital. Lakshman Achutan is the managing editor of the Economic Cycle Research Institute. And Jim Ellis is the assistant managing editor of Business Week. Thanks to all of you for being here. I want to start with you, Peter. You have been writing about and describing a coming crash and recession for some years now. I hate to say that some of the things that you've written about, as outlandish as they seem, do seem to be bearing out right now.
Sure. You know, the problem, too, a lot of the jobs that are now being destroyed in our economy never should have been created in the first place. They were a function of our bubble economy, of the fact that Americans were borrowing money and spending too much. And as they can no longer spend because we're broke, all these phony service sector jobs are going to have to disappear. And as painful as it is for the people who are in those jobs, the government has to stand aside and let it happen. We can't try to keep people in non-viable jobs. We need to go back to making things, and it's going to be a very painful process. And Americans are going to have to rein in their spending and start saving money.
I just want to ask you one thing, and I know this is theory that you've worked on, but we're now talking about officially close to 2 million jobs lost this year alone, and it could be substantially more. I've heard you say it will need millions of job losses to set this economy straight. What is the real equation there for people? What does your science and your academia tell you that real people are supposed to do? 5 million people are unemployed.
Look, it's not my science. It's just how markets work. It's capitalism.
Yeah, but don't we have an obligation as a nation, as a modern economy, to make sure that 5 million people aren't living in tents?
There's nothing that we can do. You know, the government can't create jobs. They're going to destroy jobs trying to do it. The government doesn't have any money. All they have is a printing press. We need the free market to create jobs. If the government wants to help, they should reduce their burden on the economy. We should be cutting government spending. We should be cutting taxes. We actually should be raising interest rates. We're doing all of the wrong things,
listen,
and we're going to destroy this economy.
Nobody is talking about doing any of those things. You're right. I mean, and nobody's. And so what they're talking about doing is spending a whole lot of money in fiscal stimulus, and we've got the Federal Reserve doing everything that it possibly can to keep the economy afloat.
But they're not going to keep it going. Remember, we're in trouble because we borrowed and spent too much money. We're not going to borrow and spend our way out of it. We have to do the opposite of what we've been doing. We are simply digging ourselves into a deeper hole right now.
Lakshman, we're not doing what Peter says we should be doing, and no one says we're going to do that. What are we doing, and will it work?
Well, the one thing we're doing is we're probably cutting taxes, which is, I think, one of the things you were prescribing. But what we are doing here is they're throwing an ungodly amount of money at the economy. Not only the U.S., all of the major economies in the world are doing this. Even China is doing it in a coordinated way.
And you're a proponent of the idea that will ultimately work.
Well, look, what this is going to do is it's going to mitigate, to a degree, the pain on the way down. We are in a severe recession. As you were pointing out, this economy went from a mild recession to a very, very severe recession. The numbers today, they don't tell you anything about the future. They just tell you that a few weeks ago, we really accelerated to the downside. Now, when you look at the forward-looking indicators on the business cycle, they don't look years ahead, they look quarters ahead. They are tanking. They are at the worst readings they've been at in 60 years. So we've got more numbers like we saw today, or on Friday, coming in the months ahead. And in order, the one thing, the business cycle, the sharper the downturn, it tends to beget a sharper upturn. All of the things that we're doing here in the desperation of the moment are going to create all kinds of big questions on the other side in terms of the ideology of free markets, inflation, and other things, printing presses with the currencies.
But Jim Ellis says it's too soon to start worrying about that, right? I mean, we are facing the beast that we're facing right now, and then somewhere down the road there'll be a recovery and a bubble that'll have to be popped again. But what are we doing right now, and will it work?
Well, right now we basically have to find ways to free up the credit markets, get people to lend again, and as bad as we ran into trouble with people borrowing a lot and spending, we've got to get people spending again. That is something that I think some people, particularly sort of fiscal conservatives, really worry about. But that's a bubble to come. That's next year's fight or the fight after. Right now, the only thing to do is to get money coursing back through the economy, and that's going to be a real challenge for the new president, given that we're talking about doing that and basically accepting deficits that we haven't seen in years.
Hold on, Peter. We're going to have this discussion in a way where our viewers can understand how they fit into it. This is a very smart discussion. You need to know how this affects you. Now, the big buzz this week has been about the auto industry and whether or not to give it a bailout loan that is worth billions of dollars. You'll hear what one auto CEO claims would happen if his company went under.